Hello everyone, welcome to our this lecture of our English batch in which we are going to cover your three standards, that is Essay 200, Essay 210 and Essay 230. So first of all, there are few standards in your CA final audit syllabus for which ICI says ICI hasn't given any detailed standards in your CA final audit module, and ICI says that these standards were already taught to you in your CA intermediate level, and application part of these standards will be asked on your CA final level. So basically ICI wants us to remember everything that we did in our CA intermediate, and they can ask anything based on application and CA final level. So basically what I have done is I have taken the content of these standards from your CA intermediate audit modules, and only those part which were you can say that are eligible or that can be asked by ICI at a CA final level. Basically all the application part of all the standards I have included that in your concept book, and we will definitely study everything from that concept book. And apart from this, you don't have to refer anything, even one word you don't have to refer apart from all these coverage, all these content that we are going to cover in this particular lecture. This is just a disclaimer for not just for this essays. There are many different essays which there are many more essays which ICI haven't covered in his CA final audit ICI module. So we will definitely understand from the intel level perspective and take all the application part and discuss it here at a CA final level. You don't have to do anything apart from what I am teaching currently. Okay, yes sir. With this thing, let's start with our essay 200, 210 and 230. First of all, let's discuss our essay 200. So what does essay 200 say, sir? Essay 200, you can say 00. So it stands for OO. It talks about overall objectives of independent auditor and conduct of audit in accordance with essays. What is our objective as an auditor? What is my objective to do an audit, and how can I conduct audit as per essays? We have to conduct audit as per essays. This is the first standard of your standards on auditing series. We have discussed already SQC1 and SA220 that talks about quality control, that is applicable on all of the standards. This standard is your first standard from your essays. Okay, yes sir. So it talks about overall objectives of independent auditor. We have already discussed the objectives of the auditor in your basics class, in your first class, but obviously sir, we don't remember what we studied 1 hour before. So how can we remember what we studied one or two lectures before? So basically I will just definitely revise you. The objective of the auditor is to obtain reasonable assurance. For what we need to obtain reasonable assurance, sir? That financial statements, in their financial statements there is no material misstatement. Yes sir, I can remember something, that the financial statement doesn't have material misstatement, which means we can say that the financial statements are prepared as per applicable financial reporting framework. And if everything is correct, if we are able to get the reasonable assurance, which means that the reporting, the opinion which we are forming, we have to write it and give it to the users of the financial statement based on audit report, and the reporting should be as per standards on auditing. Why we are doing it, sir? So that we can increase the confidence of users in the financial statement. This is the basic objective of my as an auditor. So what is the objective, sir? Let's first of all discuss from the concept book. It says essay 200, overall objectives of independent auditor and conduct of audit in accordance with essays. What is the objective of audit, sir? As per essay 200, to obtain reasonable assurance. How about what, sir? That financial statements are free from material misstatement. What does it mean? What is meant by free from material misstatement? The financial statements doesn't have any misstatement, whether due to fraud or error. I told you that the material misstatement can be due to fraud, that is intentional, and can be due to error, that is unintentional. So there is no material misstatement in the financial statements, so that we can enable, so that the auditor is able to express an opinion whether the financial statements are prepared as per AFRF or not. AFRF is applicable financial reporting framework based on which the financial statements are prepared. Okay, yes sir. And to report on the financial statements as per essays, why this is done, sir? To enhance, to increase the degree of confidence of users in the financial statements, to increase the confidence of users in the financial statements. Okay, yes sir, this was a basic thing. I don't think that will be asked to CA final level 2. Okay, now this is an important question, or this is an important topic as per CA, as per essay 200, that is the inherent limitations of audit. Inherent means what? Permanent limitations on audit. I already told you all the jargons, all the difficult words of English. Wherever there is a difficult word of English, we will definitely be using a similar easier English language for that particular word. Suppose inherent means what? Permanent, and we have already mentioned all those similar meaning words in bracket in your concept book only. Okay, yes sir. So what does an inherent limitation, what are the inherent limitation of audit? First of all, I already told you that we cannot obtain absolute assurance. We can only obtain a reasonable assurance. Now, what is the difference between absolute and reasonable? We have already discussed in the basic class. This absolute assurance is 100% guarantee that financial statements are prepared as per FRA. But as an auditor, I cannot give 100% guarantee because there are inherent limitations on audit. Now we are going to discuss what are those inherent limitations of audit. First of all, there is a limitation due to nature of financial reporting. What is financial reporting, sir? The process by which the financial statement are prepared. The process itself has its own limitation. What is the limitation, sir? Are the financial statement, the amounts that we use in the financial statements, are they all exact? No. Management makes lot of judgments for judging the amounts that has gone to the that has to be gone into the financial statements. For example, the provision for doubtful debts, provision for anything is based on estimates, is based on management judgments. So the financial reporting, the process itself has its own limitation. That's why there is an inherent limitation on audit. Second limitation in financial reporting is the financial statements, the amounts are based on internal controls. We check, first of all, what we do is we do risk assessment procedure. In risk assessment procedure, we check the internal controls. Now there can be cases where as an auditor I feel that internal controls are working properly, but actually the internal control is not working properly because internal control have their own limitations based on which the financial statements are prepared, and financial statements can then have their own limitations. So what is the limitation? Suppose, obviously we will discuss this in detail in your risk assessment and internal control chapter, but for now if I have to tell you one thing, that is, suppose the manager example which we took, that there is a manager who have to approve the expense claims of all the articles. Now if the manager and articles collude, they team up and they form a team, and then they circumvent the control, or they collude, and then what do the manager says to the article, you file any of the claims you want to. If suppose you have done the 100 rupees actual expenses, you can file like an expense claim of 1000 rupees. I will definitely approve it. The firm will pay you 1000 rupees. We will keep the 50-50. Now this as a management, I can see, yes, the control is working properly. The manager is checking all the claims and approving all the documents, and then after I am paying it. So from a management perspective, this control is working fine, but there is a limitation that the manager and the article has colluded, has teamed up, and as a management I do not know anything about it. So this is a limitation of internal control, based on which there is a limitation on financial statements, and that's why there is an inherent limitation on audit as well. Okay, yes sir. So first of all, this. Second is based on financial reporting is only that there is a timeliness of financial reporting, and there has to be a balance between benefit and cost. Now suppose I want to audit any financial statements for 3 years. I have audited the internal control first year, I have audited the internal control in the second year. For the third year, I am thinking, okay, there is for auditing any of the things, it requires a lot of time and efforts and resources. So let's skip auditing the internal controls this time, and this time only the internal controls have changed, and I do not know anything about it because I haven't audited the internal control. So the benefit of doing any procedure also involves the cost of doing any procedure. I will have to maintain a balance, because if I want more benefit, then I will have to increase the cost, which I cannot do. If I decrease the cost too much, then the benefit is also decreased too much. So I will have to make a balance between benefit and cost. So what does it say, sir? That the importance or the relevance of information decreases over time. You know the newspaper's theory that today's newspaper is most important to us, but yesterday's newspaper is not important to us. So the relevance, the importance of information decreases over time. As the time passes, the relevance of information also decreases. So this is also a limitation of your audit. Third is the nature of audit procedures. The procedures that we perform in audit themselves have their nature of inherent limitation. First of all, what is the limitation, sir? There are practical and legal limitations in case of audit. What is a practical limitation in case of audit? I am auditing Reliance. Can I audit the lakhs and crores of transaction? No, sir. What I will do, sir, I have told you already that we will do sampling. Now we will do sampling. What I will assume is, okay, so if all the sample is correct, then all the transactions will be correct. If the sample is wrong, then all the transaction will be wrong. So this is a limitation. This is a practical limitation. I cannot do anything about it. It may happen that the sample is wrong, but everything is correct. It may happen that the sample is correct, but everything is wrong. So this is a practical limitation. What is a legal limitation, sir? I cannot force the management to provide me any of the information. I can just request the management, Vicky, please provide me all the information. I cannot just be like Daya from the CID and break all the doors and get my information on my way. I cannot do that. I am an auditor. I am not an investigator. Investigator have those specific legal powers, but as an auditor, I do not have those specific legal powers. I can just request. So this is a legal limitation on the auditors. That is, nature of audit procedures also has inherent limitation. Now fourth is future events. I told you there is a going concern, fundamental accounting assumption. I'm saying based on the past history and events and based on the financial position of the entity that yes, financial statements are prepared on the going concern, and it is correct. Suppose I am saying that, and just after tomorrow, just okay, you can say that 31st March is the date, on 2nd April only there is a major fire in the factory of the company, and there is only one factory and the fire has destroyed the factory fully. Now the company is not operational. Now the company is not going concern. So as an auditor, I am not an astrologer here. I cannot predict the future. I cannot say, okay, the company will be forever going concern. I can guarantee that the company is going concern. I cannot say that. I can just give a reasonable assurance. Yes, company is going concern if everything falls good. So yes, future events, there can be adverse uncertain events which can definitely question the viability or the survival of the company itself. Okay. Yes, sir. And the fifth inherent limitation is it is not an investigation. As I told you, investigation has specific legal powers. We do not have any specific legal powers. Investigation is narrow and just for finding the frauds. While audit is not finding fraud, we are just checking the financial statements, and we are the generals. We have general scope, not a narrow scope. We have to check everything from a company's perspective in a limited time. Okay. Yes, sir. So these are the 5 inherent limitations of audit procedures of audit. What are the 5 limitations, sir? Nature of financial reporting, the timeliness of financial reporting and balance between benefit and cost. Third is the nature of audit procedures. Fourth is the future events, and fifth is investigation. Now, if there is any poor corporate governance, which means that the management is not working properly, is this an inherent limitation of audit? No, sir. It is a limitation of management, or it is a weakness of the management. It doesn't concern auditor about poor corporate governance. What are the decisions they are taking? I am not concerned about it. I am concerned about the financial statements. Okay. Yes, sir. Now, suppose if there is inherent limitation of audit, I am an auditor. I am just taking it an excuse. I am making an excuse. Okay, there are inherent limitations. Suppose I am auditing a company, and after I have audited the company, there is a fraud that is discovered after I have audited, and the management then blames the auditor that the auditor has not done the audit correctly, since we have discovered the fraud and the auditor was not able to discover the fraud and everything and anything. And as an auditor, I am saying, see, management, there is an inherent limitation of audit. That's why I was not able to obtain sufficient and appropriate audit evidence. That's why I am not able to obtain persuasive evidence. This is an so basically, I am not responsible for any fraud that is detected after my audit. So this is not the case. The inherent limitation of audit is not a justification for less than persuasive audit evidence, which means that there are inherent limitation of audit. We accept that, but since even after that you will have to obtain persuasive audit evidence. Persuasive means sufficient and appropriate audit evidence, convincing audit evidence. You have to obtain persuasive audit evidence, and after obtaining persuasive audit evidence, if there is a fraud discovered which you were not able to discover, then you can use this inherent limitation as a excuse or as a defense. Okay. Yes, sir. You will have to obtain persuasive audit evidence it is not a justification for not obtaining persuasive audit evidence. Now, MCQ, one more MCQ it was there, that you found the internal control satisfactory. You checked the internal control and you found the internal control satisfactory. You obtained persuasive evidence. You didn't find any suspicious circumstances, but after that a fraud was discovered by the management. Then is that fraud responsibility of auditor? No, that fraud is not responsibility of auditor, because auditor has done his work correctly. Okay. Yes, sir. This were the inherent limitation. Let's discuss once again inherent or permanent limitations of audit. That the auditor cannot obtain an absolute assurance that financial statements are free from material misstatement because of the following limitations. But mind you, this is not a justification for auditor to be satisfied with less than persuasive audit evidence. You will have to obtain persuasive audit evidence. What are the inherent limitations? First of all, nature of financial reporting. That while preparing the financial statements, management makes a lot of judgments which involves a uncertainty. Maybe it may prove right, it may prove wrong as well. Okay. Yes, sir. Secondly, the requirement for audit is that management acknowledges its responsibility, that the management has the responsibility. What management has the responsibility? To prepare financial statements as per AFRF. Management's responsibility is to prepare financial statements as per FRF, and management has the responsibility to devise suitable internal controls. But however, there may be cases that the controls may not have operated to produce reliable financial information, which means it says that there may be situation that the controls might not have operated correctly. Why? Because there are inherent limitations of internal control as well. Okay, yes. Second is, okay, look at here. Second is timeliness of financial reporting and decreases level of relevance of information over time. What they say, sir, that the relevance, what do you mean by relevance? Importance. The relevance of information decreases over time. An auditor cannot verify each and every matter. Sir, I don't have that time, resources, cost, everything that I can verify each and every matter. I cannot verify each and every matter. Therefore, there has to be balance between a reliability of information and cost of obtaining it, because the more information that we want to obtain, the more cost we have to incur, and we cannot incur unlimited costs. So we will have to maintain a balance between the reliability of the information and the cost of obtaining the information. Okay, yes, sir. Third is future events, that there can be adverse or negative events that can seriously affect the entity's ability to continue as business. Basically, it talks about going concern, that there can be future adverse events that can affect the going concern assumption. Okay, yes, sir. Next is nature of audit procedures. Why audit itself has an inherent limitation? Because there are practical and legal limitations to obtain sufficient and appropriate audit evidence. What are the practical limitations, sir? That we do sampling instead of testing all the transactions. There may be a case that the sampling provides us different conclusion, and testing all the transaction would have provided us different conclusion. So this is the practical limitation. What is the legal limitation? That management, it may happen that the management doesn't provide us with the complete information that the management has, and auditor cannot force management to provide the information. We can only report, we can only request the management, and we can only report in our auditor's report that the management has not provided the complete information. We can just do that. We can just inform the users of the financial statements. We cannot do anything about this. Okay, yes, sir. And last is, it is not in nature of investigation, so we do not have specific legal powers, and our scope is general, whereas investigation scope is narrower. Okay, yes, sir. So these were the inherent limitation of audit. Last topic of SA 200 is professional skepticism. Now, what is professional skepticism? So it says that we have to maintain a questioning mind. What does a questioning mind means? So suppose auditor, you are an auditor and you went to the client, and the client says ki, this company, this is our related party, and we haven't had any transaction with the related parties. Now you will have to have that questioning mind to understand what is the relationship with what is your exact relationship with this related party, what were the transactions that were happened in the previous period, why the transactions didn't happen in the current period, is there any balance changes, what was the opening balance of this related party in current year, what is the closing balance of this related party in current. So you will have to maintain a questioning mind. You cannot just accept anything and everything that is said by the client to you. You have to be cautious, you have to be alert, you have to maintain a questioning mind. You need to question everything that is said by the client. You cannot accept anything and everything that is said by the client. This is the main thing, which means a professional skepticism. You will be skeptic. You should be skeptic about anything that is said by the client. So what does it include, sir? It includes three things here. It includes three things. First of all, you have to maintain a questioning mind. Second, you have to be alert to those conditions which indicate possible misstatement. If there is any indication that there is a possible misstatement, then you need to be alert to those conditions to identify if there is any actual misstatement or not. And lastly, you have to do a critical assessment of all the evidences. You cannot just casually take the evidence and say, yes, I have taken the evidence. You have to critically examine the evidence as well. Is it true or not? Okay, yes, sir. So these are the three things. First of all, you have to maintain questioning mind. You have to be alert to conditions which indicate possible misstatement, and you have to do critical assessment of audit evidence. Now, when you are alert, what conditions we need to be alert to? What indications? What are the indications of possible misstatement? Where can we say that there is a possible misstatement? When the audit evidence are contradicting. You obtain audit evidence which says that the bank confirmation, you have sent the bank confirmation, and the bank says that the balance is 1 crore as on 31st March, while the bank statement that you have received from the client says that the bank balance on 31st March is 2 crores. So the evidence that you have received from two sources are contradicting each other. Matlab, there can be a misstatement. Secondly, the reliability of documents, you question about the reliability of the documents. This evidence and this evidence is contradicting. The document underlying this evidence and the document underlying this evidence, these documents are also contradicting, means you are questioning about the reliability of the documents. Now if there is these two situations, then there can be a possible fraud. The possibility of fraud increases if these are the two situations, and if there is a fraud, then we will have to do additional procedures other than those required by essays. Okay, yes sir, these are the 4 situations for which we need to be alert that there can be a possible misstatement. Okay, yes sir. Now why professional skepticism is necessary? So professional skepticism is necessary if we want to reduce the risk. Which kind of risk, sir? First of all, the risk of overlooking unusual circumstances. Overlooking means ignoring that there is an unusual circumstance. We had transactions with this particular related party for last 10 years, but for this year we are not having any transaction with this related party, and we are just ignoring this situation. We are not asking any of the questions to the management. So this is a fatal thing. This can prove wrong. So we need to maintain professional skepticism so that we don't overlook unusual transaction. Second is over generalizing conclusions. Management, from the past 10 years, from the past 2 to 3 years when we are auditing, we generally know that the management is always of integrity, and management has said everything of integrity. So we are generalizing this conclusion this year as well, that whatever management is saying is obviously correct, and without checking it. So this we should not do this. If we are not able to, if we don't want to do this, then we will have to maintain professional skepticism. So over generalizing conclusion. And third is inappropriate assumptions. When we are deciding about the procedures, we are applying inappropriate assumptions which are not appropriate in the given situation. If we don't want to apply inappropriate assumptions, then we will have to use professional skepticism. So 3 points are there: over, in. What is over, in? Overlooking unusual circumstances, over generalizing when drawing conclusions, and using inappropriate assumptions. If you want to reduce this risk, then we will have to maintain professional skepticism. Okay, yes sir, let's discuss this topic from the concept book. What is professional skepticism, sir? That we have to maintain an attitude. What attitudes are? Okay, I will not do audit, I will not follow this. No, not this attitude. It says the attitude that includes a questioning mind. You should always have a questioning mind. You should always question everything. Secondly, being alert to conditions which may indicate possible misstatement. You need to be alert to those conditions which may indicate possible misstatement, and do a critical assessment of audit evidence. Now professional skepticism, alert to which conditions you need to be alert to? First of all, audit evidence that contradict the other audit evidence. Secondly, there is an information that you think that the reliability of documents is questioned. And third, if the reliability of document is also questioned, then there are conditions that may indicate possible fraud. And if there are any circumstances which may suggest that you need to perform those procedures which are addition to your essays. Okay, yes, you are performing essays wala procedures, and you are performing any other additional procedures as well. Okay, yes sir. So these 4 situations you need to be alert to. Next, maintaining professional skepticism throughout the audit is necessary if you want to reduce the risk. Which risk we want to reduce, sir? Over, in. What is over, in? Overlooking unusual circumstances, over generalizing when drawing the conclusions, and using inappropriate assumptions when determining the ante of audit procedures. What is it? NTE. What is NTE? NTE is basically nature, timing, and extent of audit procedures. We don't say misstatement, we say material misstatement. We don't say auditor, we say independent auditor. We don't say audit procedures, we say NTE of audit procedures. Now what is NTE? So basically nature is which audit procedures to apply. Timing is when the audit procedure should be applied. Extent is how much the audit procedure should be applied. Should we sample 10 transactions? Should we sample 100 transactions? That is the extent. So we have to decide these 3 things about the audit procedures, and when we are deciding these three things about the audit procedure, it may happen that there is a risk of using inappropriate assumptions. To reduce this risk, we need to maintain professional skepticism. Okay, yes. So now you might think, sir, from the past 3 to 4 years when I'm auditing the client, the management is always supportive. Management is of integrity. I have checked everything, and the management has been always supportive. So still on the 5th year as well, should we maintain this professional skepticism? Should we question everything? So it says that the auditor should not ignore the past experience of honesty and integrity of management and TCWG. If there is a past experience that the management and TCWG are honest and integrity, you should not ignore that. But even after that you should maintain professional skepticism. So it says yes, you have to maintain professional skepticism even when the management is honest and integrity. Okay, yes sir, this was our essay 200. Now let's move to our essay 210. What does essay 210 say, sir? It says about agreeing the terms of audit engagement. Before doing our audit, before starting our audit, we need to agree the terms of the audit engagement. You know that for every contract there is a terms and conditions mentioned, so we will have to also mention our terms and conditions with the client, and we need to agree each other terms and conditions, and then we can start our audit. Okay, yes sir. So it says there is a word that is used over here, that is preconditions for audit. As the word suggests, these are the conditions which are need to be fulfilled prior to accepting the audit. So these conditions we will have to check whether these conditions are present prior to accepting the audit. If these conditions are present, then we can accept the audit. Otherwise, we cannot accept the audit. What are the preconditions for audit, sir? Whether we have to see whether they are present or not. First of all, as I already told you, that financial statements are prepared as per FRF. So we will have to check the FRF that is used to prepare the financial statements. Is the FRF acceptable or not? If the FRF is not acceptable, that means the financial statements are not prepared as per FRF, or the FRF is itself wrong, then the financial statements prepared are wrong, then I don't need to accept this audit, because I know that I will be issuing modified opinion. So I will have to check whether the FRF that is used to prepare the financial statements is acceptable or not. First of all, this particular basic thing. Second thing is we need to understand, we need to check whether management understands its responsibility or not, because management has its own responsibilities in terms of audit engagement. We know our responsibility as an auditor, but we will have to check whether management knows its responsibility as a management or not. So yes, management, we will have to take acknowledgement from management that it understands its responsibility. What is the responsibility of management? First of all, sir, preparing the financial statements as per AFRF is the responsibility of management. Auditor has to check whether the financial statements are prepared as per AFRF or not, but the primary responsibility of the management. So financial statements as per AFRF or not. Secondly, if the internal controls are themselves wrong, then the financial statements will obviously be wrong. So we will have to see, management has the responsibility to maintain such internal controls that financial statements do not contain any material misstatement. So first primary responsibility is to prepare financial statement as per FRF, but if internal controls are wrong, then financial statements will be prepared wrong. So therefore, management has a responsibility to prepare, to maintain internal controls so that the financial statements do not contain any material misstatement. And third, management has prepared the financial statement. Management has the responsibility of internal control. Then management need to provide them to the auditor. Management need to provide it to the auditor. What the management need to provide, sir? First of all, the management need to provide all the information about financial statements. Access to all the information about the financial statement. This is a responsibility of the management. Provide to whom, sir? Provide to the auditor all the information relevant to the financial statements. Okay, not only the information relevant to the financial statements, but any other additional information that may be requested by the auditor, the management needs to provide that. It is the responsibility of management, and we should obviously take an acknowledgement from the management that it understands its responsibility, that they need to provide me additional information requested, and management says, okay, I can manipulate the information and then I can provide you. So for tackling that, we have told you that you need to provide us unrestricted access to person as well. Any person from your organization, if I want to inquire, if I want to obtain any information unrestricted, without any restriction, I can go to that person and require him to do anything for me, or inquire that person as well. You need to provide me unrestricted access. This is the responsibility of management to provide the auditor. What need to provide to the auditor, sir? AU. What is AU? AU means A for access to all information about financial statements, A for additional information requested, and U for unrestricted access to person. Okay, yes sir, these three things need to be provided to auditor, and these are the management's responsibilities that we need to take acknowledgement for. Okay, yes sir. Now there is a MCQ that there is a third party which prepares entities financial statements, and management needs to accept its responsibility for preparation of financial statements. Now management is saying, how can I accept the responsibility? There is a third party which prepares the financial statements. So what we can do is we can accept a joint responsibility that management and third party is responsible for preparation of financial statements. Now in this particular situation, can an auditor accept the audit? No. The management should obtain or should assume primary responsibility for preparation of financial statements. The management cannot have a joint responsibility. Okay, yes sir. If the management doesn't agree to assuming the primary responsibility, then I as an auditor will not accept the engagement. Okay, yes sir. Let's discuss about essay 210. Essay 210 says about agreeing the terms of audit engagement. What are the terms that we need to agree in the audit engagement? First of all, there is a precondition qualification for audit, the conditions which should be fulfilled before accepting the audit engagement. So we need to determine whether the preconditions are present or not. What we need to do, sir? First of all, determine whether the financial statements FRF is acceptable or not. Secondly, obtain agreement of management. We have to obtain agreement of management that management acknowledges and understands this responsibility. What is the responsibility of management? First of all, to prepare the financial statements as per FRF. Second, for internal control so that the financial statements are free from material misstatement. And third, to provide the auditor AU. AU is what, sir? A, access to all the information for which management is aware that is relevant to the financial statements. Secondly, additional information that the auditor may request. And third, unrestricted access to persons within the entity to obtain audit evidence. Okay, yes, sir. Now let's talk about what are the actual terms, or basically the agreement between the auditor and the management. So first of all, let's talk about the process. The process is what is the auditor's appointment process, sir? We discussed it already in the last class as well, that first of all, auditor is appointed by the shareholders in the AGM. The shareholders appoint the auditor in the AGM, and then TCWG sends an appointment letter to the auditor. First of all, the company sends an appointment letter to the auditor. Auditor accepts the appointment letter, and in return, the auditor sends an engagement letter to the client. This is your MCQ, bro, that the auditor sends an engagement letter to the client. It's not the other way around. Client sends an acceptance letter or appointment letter. Auditor accepts the appointment letter and then sends an engagement letter to the client. Okay, yes, there's an MCQ that the auditor accepts the offer letter. This appointment letter is accepted by the auditor as an engagement letter. Can appointment letter and engagement letter be same? No, sir, it cannot be the same. It's not allowed. There should be a separate engagement letter which need to be sent by auditor only. We cannot accept the client's appointment letter as an engagement letter. No, we need to send an engagement letter separately by the auditor. Okay, yes, sir. Now, what are the terms in the engagement letter that we need to discuss with the client? First of all, what will be the terms? First of all, I will share about my responsibility. What are the auditor's responsibility? Now, what is the auditor's responsibility? We don't need to know about it now. We will discuss it in SS 700. But for now, you just need to know what are the things that are coming in the terms of the engagement letter. First of all, it talks about auditor's responsibility. What is the responsibility of auditor? What is the responsibility of auditor? To maintain the objective and scope of audit. What is the objective and what is the scope of the audit? And secondly, about the report, that we need to issue a report. So in the terms of the engagement letter, it is mentioned about the expected form and content of audit report. What will the expected format of the audit report? What will be the exact contents of the audit report? We normally provided before only in your terms and audit engagement letter. Okay, yes, sir, we talked about auditor's responsibility. Now let's talk about the management responsibility. What is the management responsibility, sir? To prepare financial statements as per AFRF. So identification of AFRF will be done in your terms of engagement letter. These 5 terms will be there in your engagement letter. So let's understand here. Agreement on audit engagement letter. This audit engagement letter is sent by auditor to his client. Why this is sent, sir? To avoid any misunderstanding, so that client know what are things are covered in the audit and what are his own responsibilities in terms of audit engagement. Okay, yes, sir. What are the things, sir? First of all, responsibilities of auditor. What is the responsibility, objective and scope of audit of financial statements, and we give a reference to what will be the expected format and content of report to be issued by the auditor. Now, sir, how can before starting the audit we can give our content of auditor's report? What if we want to modify the opinion? What if we want to issue a qualified opinion? What if we want to issue a disclaimer of opinion? How can we give a expected form and content? So basically, we can include a statement that there may be circumstances in which this report may differ from the expected format and content. We give the expected format and content, but we say a statement that there can be situation that this expected format and content will not be followed in our auditor's report, that the auditor report may differ from the expected form and content. This will be the case when we will have to issue modified opinion. Okay, yes, sir. Now second is management's responsibility. What is the responsibility? For identifying the AFRF for financial statement preparation. So in the terms only we discuss what will be the AFRF for preparation of financial statements. Okay, yes, sir. Now, if there is any law and regulation that prescribes in detail the terms of audit as above, like on the entity which we are auditing, there is a law and regulation that is applicable on that particular entity, and in the law and regulation that is already prescribed that this will be the terms of the audit engagement. Now, even after that, will we have to separately agree on the terms with the management? No. If there is any law and regulation which already specifies everything that we have specified, then we need not to send any other engagement letter, separate engagement letter to the client, but we need to understand, or we need to take acknowledgement from the management that such law and regulation is applicable to them, and management acknowledges its responsibilities, that management know about its responsibilities. Okay, yes, sir. Let me tell you one thing, that anything that is said in any of the law and regulation is supersede or overrides our essays basic provision. Essays, if essay says something and law and regulation says any other thing, then law and regulation is always a priority, is an overriding factor than your essays. We don't follow essays, then we follow law and regulation only. Okay, yes sir. Now let's discuss question number 15. What does question number 15 say, sir? Question number 15 says that there's a Mia Limited which issued engagement letter to the auditors. Now, first of all, that does the client issue an engagement letter? No, the auditors issue an engagement letter. So first issue we identified. Second, Mr. X was not clear on some points. So basically the auditor was not clear on some points. Now what are the inclusions in the engagement letter? The engagement letter contains the details of objective and scope. One thing is done. Second, the responsibilities of auditor. Second, identification of framework applicable. Third, it also contains the reference to the expected form and content of the report from all the three joint auditors. Fourth, so basically it contains 4 things, but there are 5 things in the audit engagement letter. 4 things are there. The 5th missing thing here is management's responsibility. There is nowhere mention about management's responsibility. So in your opinion, what is the discrepancy? First of all, that the audit engagement letter should be sent by the auditor, and secondly, management's responsibility is not mentioned. So we will mention that as per SQC, as per SA 220, we have to agree the terms of the audit engagement letter, and the audit engagement letter should be sent by the auditor to the management to avoid any misunderstanding. And what are the contents of the audit engagement letter? The responsibilities of auditor. What is the responsibility of auditor? Objective and scope, and reference to expected form and content. Then responsibilities of management about applicable financial reporting framework. In the given scenario, what happened, we will highlight, and then we will say that the engagement letter does not specify the responsibilities of management, where it should specify. Now sir, you mentioned about that we need to also say that the Mia Limited, the company Mia Limited, should not have issued the engagement letter. Where is that line? ICAI has skipped that line. ICAI has not written it that in its particular answer, that Mia Limited should not have sent the engagement letter. Now what we will do as a student, we will definitely mention in our own answer, in the answer sheet, that the engagement letter was to be sent by the auditor, not by the Mia Limited. Even if the ICAI has forgotten it, we will definitely mention in our answer as well. Okay, yes sir, this was your question number 15. Now let's talk about some of the conditions. Suppose, what if the preconditions for the audit are not present? What if the preconditions for audit are not present? Now these are preconditions because these are our conditions. If these conditions are not present, how can we accept the audit? So it says if these conditions are not present, then we will discuss with the management. We will not directly decline. We will first of all discuss with the management, and auditor shall not accept the proposed audit unless required by law and regulation. So if preconditions are not present, first of all discuss with the management. After discussion, you say that preconditions are still not present, then you have 2 options. If it is required by law and regulation to accept the audit, then we will have to obviously accept the audit, because as I already told that law and regulation says something, then we have to follow the law and regulation. And if the law and regulation doesn't require to accept the engagement, then you can obviously decline the engagement. Okay, yes sir, this is the first case. Second, limitation on scope. Suppose the client says that they will put a limitation on my audit in the proposed audit. So I have not accepted the audit as of now, but in the proposed audit engagement, there is a limitation on scope that is imposed by client, and such limitation is such that it will result in disclaiming the opinion on the financial statements. What does a disclaimer of opinion mean, sir? I have already discussed in the basic class. Disclaimer of opinion means that we have not obtained sufficient and appropriate audit evidence, and the effect of the possible misstatement is both material and pervasive, that is spreaded in the financial statement as a whole. So I will have to issue a disclaimer of opinion. If I know from the starting that I will have to disclaim my opinion, then should I accept the engagement? No sir, I should not accept the engagement. So if I know that from the starting that I will have to disclaim my opinion, that I should not accept the limited engagement unless required by law and regulation. Okay, yes sir, let's do question number 14. What does question number 14 say, sir? Here is question number 14. It says that the auditor's term that they will be not provide internal audit reports to Mr. Ram. They are putting a limitation on scope that they will not provide me internal audit report. I will not be able to check internal audit report, and limitation scope. What are the preconditions before accepting and refusal? So basically we will have to discuss the preconditions, and then we should know what are the, whether as a Mr. Ram we should accept the engagement or not. We should definitely not accept the engagement if it will result in our disclaiming the opinion. So first of all, we told about our precondition for audit, that we have to FRF is acceptable, and management agreement, we need to take operating management agreement that it acknowledges and understands its responsibility of about everything. And lastly, further, if a management imposes a limitation on scope and we feel that we have to disclaim an opinion, then we should not accept such a limited engagement unless required by law and regulation. Okay, yes sir. And they have mentioned 2-3 points more, that if the preconditions are not present, that we should not accept the engagement unless required by law and regulation. In the instant case, Mr. Ram should not accept the appointment as a statutory auditor. Okay, yes sir, this was your question number 14. Now let's talk about, suppose we have already discussed discuss the terms of engagement with the management, and it had already agreed, and we have started the audit. We have accepted the audit. We have started the audit. Now, after accepting the audit, management has described or management has requested for a change in terms of audit engagement. Management says that now I want to change the terms of audit engagement. Then, as an auditor, should I accept that change in terms of engagement or not is the question over here, or is the topic over here. There may be a request from the entity to change the terms of engagement. Why there is a request from the entity to change the terms of engagement? It can be because of many of the reasons. Few reasons are, first of all, it may be because of change in circumstances. Previously, the management wanted audit because the bank wanted audit, but now the bank says that review will be fine. So now the management is saying to change the terms so that we can conduct the review, not the audit. It can be the case. Secondly, there is a misunderstanding. Management thought in the audit, management when appointed us as an auditor, management thought in the audit we will check everything, the operational part as well, the executional part as well, the internal controls as well, and the financial statement as well. But we were only checking financial statement, internal control. So there was a misunderstanding from a management's perspective that about the auditor. So now the management says that I don't want audit. I will hire an internal auditor for doing everything. So there's a misunderstanding. Thirdly, the management wants to restrict or put a restriction on my scope. Management wants to say, now management is saying that please change in terms of engagement. I cannot give you access to our inventory. I cannot give you access to our sales transactions. I cannot give you access to our trade receivables transactions. So that can be the case. That is why management is requesting for the change in terms of engagement. So what it says, whenever management requests us for the change in terms of engagement, we need to see whether there is any reasonable justification for doing so. Whether we have any reasonable reason for doing so. If there is any change in circumstances or if there was any misunderstanding, then it can be considered, yes, these are the reasonable justification for accepting the change in terms of engagement. But if management wants to change the terms of engagement because it wants to put a restriction on my scope, then that is not a reasonable justification. Or management wants to provide me incomplete information, incorrect information, then that is not a reasonable justification for accepting the change in terms of engagement. Then I will not accept the change in terms of engagement. Okay? Yes, sir. Now, what happens is there is another point in this particular topic, that what if the requested the management is requesting me to change to a lower level of assurance. What is the lower level of assurance? I told you reasonable assurance we provide in audit. After audit, the lower level of assurance is review, because in review we provide limited assurance, we do limited procedures. Now what does management say? Management says that auditor, please don't do audit, do review. So management is requesting to change the terms of audit engagement to a lower level of assurance. Then also I will have to see whether there is any reasonable justification for doing so, and you now know what is the reasonable justification. So if there is any reasonable justification to doing so, then I will do review. I will issue a review report, and in the review report I will not include any reference to the original engagement or original procedures. So suppose I am doing audit, I started doing audit on 1st April, and after 3 months on 1st July, the management comes and tells me to start review, and I find it, yes, if there is a reasonable justification, and I start review after this time. So for 9 months I am doing review, for 3 months I am doing audit. So what it says, when you are preparing your 9 months review report, then you should not include, or you should not say that you have done audit for 3 months. You should not give any reference to the procedures that you had already performed in these 3 months. Okay, yes sir. So to avoid confusion, users should not confuse now. Okay, 3 months you are doing audit, 9 months you are doing review, what is this? So auditors, so that the auditors do not get confused, users do not get confused, you should not include any reference to the original engagement or any original procedures that were performed. Okay, yes sir. If you think that there is no reasonable justification for doing so, and the management is not allowing you to continue the audit, then you should withdraw from the engagement. Obviously I cannot accept the change in terms of engagement, and the management is not allowing me to continue the audit. Then I cannot force the management. No, I can just request. If management is not allowing me, then I can withdraw or resign from the engagement and report about this to TCWG, owners and regulators. Okay, yes sir. Now let's come to the topic of acceptance of change in terms of audit engagement. What it says, sir, there can be a request from the entity to change the terms. Why, sir? First of all, it may be because of the change in circumstances that affect the need for the service. Secondly, it may be because of the misunderstanding about the nature of audit, that management didn't understand about the nature of audit and there was a misunderstanding. And third is the restriction on scope imposed by the management or caused by circumstances. Management wants to impose a restriction on my scope. Okay, yes sir. So these 1 or 2 can be considered as a reasonable basis for change. In contrast, if Change may not be reasonable if it relates to any information that is incorrect, incomplete, or unsatisfactory. Then we cannot say that there is a reasonable justification, and we should not accept the change in terms of engagement. Okay, yes sir. Now, if before completing the audit, auditor is requested to change to an engagement that conveys lower level of assurance, then we as an auditor should determine whether there is any reasonable justification or not. And before agreeing to change to a lower level of assurance, we should assess whether we have any legal or contractual implications or not. Implications means impact, whether any legal or contractual impact about this or not. Okay, yes sir. Now, if we see that there is a reasonable justification to change the audit to either review or related services, then to avoid the confusion, the report which we'll be preparing should not include any reference to original engagement on any of the procedures that were performed in original audit engagement, except if the audit is changed to agreed upon procedures, then we can include the reference to the procedures that were performed in the audit engagement. Okay, yes. What if there is no agreement between the change in terms of audit engagement and the management is also not permitting us to continue with the original engagement? Then there is a deadlock situation. Then we will have to withdraw from the audit if possible and determine whether there is any obligation to report these circumstances to TCWG owners or regulators. Okay, yes sir. Last topic of your essay 210. Last topic, what does it say, sir? Terms of engagement in recurring audits. What does it recurring audit mean, sir? Recurring audit means that we have done the audit for past years and now we are continuing to do audit for the same client only. So that is called a recurring audit. So it says that in case of recurring audit, obviously every year we don't have to agree the terms of engagement with the client, but there can be certain situations where we need to revise the terms of the engagement or where we need to remind the entity of the existing terms. Now, what are those factors or what are those situations? So first of all, reminding, when we need to remind the entity of the existing terms, when we think that the management misunderstand the objective and scope of audit. When we think that the entity misunderstand the objective and scope of audit, then we will need to obviously remind the entity about the existing terms. When we will need to revise the terms, when there is a revised terms. When we need to revise the terms, sir, whether when there is a change in business or there's change in the laws that are applicable to business. Business means what can be the changes in business? There can be a significant change in senior management, CEO, CFOs has left and new CEO, CFOs has come, or there can be a significant change in ownership. There is a new owner, someone who bought the company, so there is a significant change in ownership, or there is a significant change in nature or scope of the business. Currently we were dealing only in the agricultural produce and now we are dealing also in the FMCG industry. So there is a difference in the change in the nature of the business, scope of the business. Currently we had only 1,000 employees, 1,000 outlets, and now we have 10,000 employees and 10,000 outlets. So this year the scope has increased. So if there is any change in nature or scope. Now laws, about laws, what sir? If there is any change in legal or regulatory requirements, what is the most important legal or regulatory requirement? FRF. If there is a change in FRF or any change in other reporting requirements, then we need to revise the terms of audit engagement in case of recurring audit. Okay, yes sir. What does it say, sir? What are the terms of engagement in recurring audit? First of all, when we need to remind the entity where there is an indication that the entity misunderstand the objective and scope of audit. When we need to revise the terms, where there is any revised or special terms of engagement. If there is any change in the business or there is change in the laws, business, recent change of senior management, a significant change of ownership, or there is a significant change in nature or size of entity's business, or laws about the law, sir, there is a change in legal or regulatory requirements, there is a change in FRF adopted in preparation of FS, or there is a change in other reporting requirement, then we will need to change the terms of engagement. And all these things, for all these things, there is automatically implied that there is a reasonable justification. So if in a question it asks that the client is changed because of any of these reasons, then we can say yes, there is a reasonable justification and the auditor should accept the change in terms of audit engagement. Okay, yes sir, this was our essay 210. Now let's start with our essay 230, which talks about audit documentation. What is audit documentation, sir? They are basically those working papers which we create while performing audit procedures, in which we mention all the audit procedures we did, what are the conclusions, what are our opinions, and everything that is we do is mentioned in the audit documentation. Can entities' accounting records be treated as audit documentation? No sir, we have to maintain our own audit documentation. Now there is a process of assembly of final audit file. We obviously, every member of the team prepares an audit documentation. Now at the end of the audit, we have to assemble all the audit documentation that is prepared by different team member in a final audit file for our future references. Obviously, we cannot rely on finding people just after 2 to 3 years when we want to review the quality of the audit. Then we cannot find all the people and ask for their audit documentation. Just after the audit, we should ask the documentation from each of the team member and prepare a final audit file. This is called assembly of final audit file. There's a timeline for completing this assembly of final audit file, which is not more than 60 days after the date of auditor's report. This is an MCQ. Just after the date of auditor's report, when you have given the auditor's report to the management, after that date, 60 days, up to 60 days, within 60 days, you have to prepare your final audit file. Okay, yes sir. Now after the now preparing this assembly of final audit file is an administrative process. What is an administrative process? You don't have to apply your brain, you just have to use your clerical mind. It is an admin work basically to just collate all the things that you get from different folders and all the documentation, and you have to just prepare and assemble and file it in your final audit file. So this is an administrative process. You don't have to perform new procedures. Why we cannot perform new procedures? Why we cannot form new opinions? Because the auditor's report date is already gone. The auditor's report date signifies that we have obtained all the sufficient and appropriate audit evidence. Now we cannot do any new procedures, we cannot form any new opinions. Okay, yes, but few changes are allowed. There can be 4 changes that can be made in the audit documentation during the assembly of final audit file. What is the 4 changes, sir? First of all, if you have obtained any evidence before the auditor's report date and discussed that evidence with the engagement team before the auditor's report date, but you forgot to file it in your audit documentation, then you can file it in your audit documentation now. You cannot obtain new audit evidences, but you can obviously file the audit evidence which you have already obtained before the date of auditor's report. Okay, yes sir. Second is, if you want to just sort from A to Z, collate, you want to combine the audit documentation, you need to cross-reference the working papers, then you can do it now. Sorting, collating and cross-referencing of working papers. If you want to delete the superseded documentation, what is superseded documentation? Basically draft versions of your files. So if you want to delete the superseded documentation, because obviously we want to avoid confusion. If we are keeping the draft version as well, if you are keeping the final version as well, then there someone who is reviewing the documentation might be a bit confused, like which is the final version, why there is draft is kept over in the audit documentation. So it says that we can delete the superseded documentation. And lastly, there is a completion checklist. So completion checklist is basically all the tasks that we need to do while completing the audit documentation. So we can sign off on the completion checklist during the final assembly process. These 4 changes can be done while doing the final assembly process. Apart from these 4 changes, we cannot do any change in our audit documentation. Okay, yes sir. Now after preparing this final audit file, do we till what we have to maintain this final audit file? For how much long we have to retain this final audit file? So there is a timeline for retention as well. SQC1 says that you have to retain the final audit file for at least 7 years. For at least 7 years, you have to retain the final audit file. For within 60 days, you have to assemble the final audit file. And after assembly within 7 years, you have to, for up to 7 years, you will have to retain the final audit file. Now 7 years will be taken from what dates are? Either the date of auditor's report, or if I am auditing a subsidiary and there is a holding company, then the holding company will prepare a consolidated financial statements, and those consolidated financial statements will be audited by another auditor. So, and that auditor will issue a group auditor's report. What is a group? That is consolidated financial statements. So if that group auditor's report also issues a report, then the date of auditor's report, my auditor's report, or the group auditor's report, whichever is later, from that date till 7 years, you will have to retain a final audit file. Okay, yes sir. First of all, I'm again saying, suppose my auditor's report date is 15th May and group auditor's report date is 20 May. Which date is later, sir? 20 May is later. So from 20 May, you will have to retain this final audit file for 7 years. Okay, yes sir. Okay, next. If I prepare 2 audit reports on the same subject matter, what is the subject matter, sir? Subject matter basically here means financial statements. If I prepare 2 reports on the same financial statements, one is because of my standalone financial statements and other is for my group financial statements, then my time limit of 7 years will be counted separately for each of the auditor's report. So if I prepared this standalone report on 15th May, then my time limits will start from 15th May. If I prepared this auditor's report for group financial statements on 20 May, then for this auditor's report, the time limit will start from 20 May. Okay, yes sir. Chalo, next, there is an MCQ that you need to calculate, so that you need to understand how do we calculate the number of days. So it says that the date of audit report is 21st August 2022. Okay, the date of auditor's report is this. Next, the regulator, that is the regulator of your client. The regulator called for proceedings 20th July 2023. So regulator called you for the proceedings, for any of the proceedings that is going on against the client on 20 July 2023, and you provided a editable Excel file of your audit documentation. You provided an editable Excel file. Who can edit the anyone can edit your Excel file and the audit documentation. You provided this editable Excel file on 10th August 2023. Now between this date there is a modified report. Between these date means there were changes made in the report between these dates. Between what dates, sir? Between these date to these date. Now tell me, what is the final assembly file completion time? How till what date I should complete my assembly of final audit file? Now I told you that to check what is the timeline for final assembly of audit file, you will have to check from the date of auditor's report, within 60 days from the date of auditor's report. These all dates are not relevant for me when the regulator called us for any hearing, when did I edited the Excel file. It doesn't matter. I will just have to check the date of auditor's report. Date of auditor's report in this case is 21st August 2022. So I will have to check 60 days. Now how to calculate 60 days? So there are 31 days in your August month. So 21 8 10 days of August, then August, September, 30 days of September, then there we have left 20 days, so 20 days of October. So 20th October 2022 is your last date of final audit file assembly process. Okay, yes sir, let's discuss it from our concept book. What does it say, sir? It talks about SA 230 audit documentation. That audit documentation is not a substitute for entity's accounting records. Entity will need to prepare its own accounting records, and I will need to prepare my audit documentation. In the audit documentation, I have to keep only the final versions of all the files and all documentations. I don't have to keep any draft, any superseded working papers. So what does it say? That the auditor need not include in audit documentation. What we should not include in audit documentation? Any superseded draft of working paper and financial statements. Any drafts of working paper, any drafts of financial statements, we don't have to include it in our audit documentation. Notes that reflect incomplete or preliminary thinking at the start of the audit. I was just thinking about something like how I will do audit and what I will do exactly, and I noted down somewhere. I don't have to include that in my audit documentation. Any previous copies of document corrected for typographical or other errors. I had some document and I then corrected the document. Because there were some errors and anything. So I don't have to keep the previous version. I will have to keep the final version. And lastly, any duplicates of document, I will have to keep the original documents only. I don't have to keep any duplicates of any document. So basically it says that you have to keep only one copy of the audit documentation and only the final version of the audit documents in your audit documentation. Okay, yes sir. Assembly of final audit file, that we have to complete the final engagement file on timely basis after the reports are finalized. What is the timely basis, sir? Audit file should be completed in not more than 60 days after the date of auditor's report. Within 60 days we have to complete it. It is an administrative process and it does not involve performing new procedures or drawing new conclusions. We don't have to perform new procedures or new conclusions since the audit report is already dated and given to the client. Okay, yes sir. However, changes can be made if there are administrative in nature. If there are administrative changes, then you can change. For example, what are the example of such changes, sir? First of all, you want to document the audit evidence that you have obtained and already discussed with the team member before the date of auditor report. You want to do sorting, collating and cross-referencing of working papers. You want to sign off on completion checklist that is in relation to file assembly process. You want to delete or discard superseded documentation. You can make these four changes while assembling the final audit file. Now SQC1 requires that the retention period of audit engagement should be there. You need to retain the audit engagement for not less than 7 years from the date of auditor's report, or if later the date of group auditor's report. Obviously both of the dates we will compare, and whichever is later we will count 7 years from that date. If two or more different reports are issued on the same subject matter, same financial statement, we are issuing two different reports, then the time limit should be considered for each report separately. We will have to consider time limits for each of the reports. Okay, yes sir. Now there are 5 points which are mentioned in your SAC1, but these are more related to your audit documentation. That's why I've included in SA 230. What does it say, sir? We have to maintain confidentiality, we have to maintain safe custody, we have to maintain integrity, we have to maintain accessibility, and we have to maintain retrievability of documentation. Okay, yes sir, these 5 things we need to maintain. And on this there is a question number 6, which I told you that we will do with the question with essay 230, and now we are doing this question number 6. What does question number 6 say, sir? That the audit documentation, we maintain audit documentation both electronically and in physical form as well. We maintain electronically, and some audit documentation we maintain in our papers, physical paper as well. The physical files are neither scanned and incorporated into electronic files nor cross reference to the electronic files. The physical files are neither scanned, we do not scan the photo, we do not take photo and keep it in our electronic files. They are not cross referenced, so there may be a lot of confusion between your electronic files and the physical files. Obviously audit documentation can be either maintained in the physical file, either maintained in the electronic file. That is completely up to the auditor. Now you have to comment about the quality control system in the audit firm. So obviously the quality control system is not correct. So this particular thing is not mentioned in your essay module, not in CA intermediate module as well. So you can definitely skip this answer as well. But just to understand, make you understand what this concept is all about, we will discuss this particular question. So yes, what does it say, sir? In accordance with SQC1, they say that we need to maintain confidentiality, safe custody, integrity, accessibility, and retrievability of audit documentation that we already discussed. So in the given situation, everything what was there we have already mentioned. It says that we need to demonstrate that we have completed the audit file and we have assembled the audit file within 60 days as per SQC1. Now, where audit documentation is in paper, या फिर electronic or other mode, the integrity, accessibility or retrievability may be compromised if the documentation can be altered, added or deleted. If there is no control on documentation alteration, addition or deletion, then there may be a risk that the audit documentation is automatically added, converted, deleted, discarded and anything, and we don't get to know about this thing. So we need to maintain integrity, accessibility or retrievability of the document. Okay, yes sir. In this case, the firm implements appropriate procedures. What are the appropriate procedures that we can implement in this case? 3 things. You have to just understand 3 things. First of all, we need to generate scanned copies of our physical paper, physical documentation. We need to scan those copy documentation, and then we need to integrate it with our electronic documentation. We'll integrate the scanned copies with the engagement file, that is electronic documentation. And lastly, we need to enable that the scanned copies to be retrieved and printed and necessary. So basically we need to keep the backup of that scanned copies as well. So what is saying, sir? 3 steps they are saying. First of all, you need to scan the printed documentation. The scanned documentation should be integrated with your electronic files, and you need to maintain a retrievable and the printed form of your scanned documentation as well. Okay, yes sir, just this, you don't have to understand anything else. Okay, chalo, last topic. Okay, second topic of essay 230 is audit ownership of documentation. What is ownership of documentation? Suppose I have prepared as an auditor, I have prepared any audit documentation. Can the client ask any audit documentation from me? Can the client say, okay, you are the auditor, you have taken a lot of audit evidence from us, you know our trade secrets as well, now please return the audit documentation, you are done with the audit, now please return the audit documentation. Do we have the obligation to return the audit documentation? No sir, because we are the owner of our own documentation. The audit documentation is the property of firm. It is the ownership of the firm. The firm has the discretion, has the decision whether it wants to give the audit documentation to any person or not. So it is a property of the firm. If the firm wants, he may provide the audit documentation to the client, but we need to consider the validity of the work performed and independence. Because suppose auditor asks, the client asks, provide me your audit documentation for FD interest, and now the client knows, if I provide the audit documentation, the client knows what exactly procedures I am using, what exact procedures I am following to check out their sample, to take samples, and what exactly is my audit methodology, and client can now predict what I will be checking next in next of the years. And that may be the case that the client now does fraud which is not covered in my audit procedures. Client can get an idea basically ki how I am doing my audit, and that's how he will be planning his fraud, so that it doesn't covered in my audit. So it says that you may provide the audit documentation, but you need to ensure the validity of work and independence in case of assurance engagement. Okay, yes sir, there was one MCQ that there is a previous auditor of the company, and now the company is asking his previous auditor to return the audit working papers, but he cannot ask, the company cannot ask the auditor to return the working paper, because the working paper is the property of the auditor. Okay, yes sir, this is the same thing that is written over here, that SQC1 provides that unless otherwise specified by law and regulation. If law and regulation says otherwise, otherwise, then obviously law and regulation will be followed. But unless law and regulation otherwise specify, documentation is a property of the firm. Firm, if allows at its discretion, may make extracts from documentation available to time, provided it need to ensure that it does not undermine the validity of the work performed, it does not reduce the validity of your work performed, or in case of insurance engagement, independence of firm or personnel. It should not affect our independence as well. Okay, yes sir. Last point is completion memorandum or audit documentation summary. So basically, in case of large audits, we have so much of audit documentation, and now when we want to review the audit documentation, will we be able to review the whole audit documentation in one go? No sir. So for large audits, to make it convenience, to make a review efficient and effective, we maintain a audit documentation summary. We maintain what it is called audit documentation summary is called completion memorandum. In these completion memorandum and audit documentation summary, we identify all the significant matters that we identified in the audit and how we addressed those significant matter. We write that in our audit documentation summary. Why sir? Because if anyone wants to review that particular audit engagement, then he can directly know in the insight or get an overview of what were the significant matters that were identified and how we address those significant matters. Okay, yes sir, that's why we prepare a audit documentation summary. Now there is one more MCQ. There is a slight concept that the audit documentation should not be prepared near the date of audit report. One is audit documentation versus assembly of final audit file. Obviously, the assembly of final audit file will be done after the date of auditor's report. But documentation should not be prepared near the date of audit report. The documentation should be prepared simultaneously when you are doing your audit procedures. Why is the case, sir? Why is it so? Because when we are, suppose I did my procedures in Jan and I'm preparing my audit documentation in May, then there may be some things that I can miss out, that I can forget to include in my audit documentation. So it is said that the documentation should be prepared on a timely basis simultaneously with your audit procedures. Okay, yes sir, this has come in an MCQ as well. Okay, yes sir. So what does it say? The completion memorandum or documentation summary, that auditor can retain as part of audit documentation a summary which describes the significant matter that were identified and how they were addressed. This summary can help in effective and efficient review and inspection of audit documentation, particularly for large and complex audits. Okay, yes sir, this was your essay 200, essay 210 and essay 230. I hope that was very clear to you. At last, I just want to say that as the auditor documents every detail, we students will have to also document every mistake that we are doing currently in our mock test. We have to document it so that we do not do these mistakes in our ICI main exams. Okay, yes sir, this time we will get exemption and audit. Please keep me in your prayers. Thank you so much and bye bye.